And now for more insight on U.S. Treasury Secretary Geithner's visit to China, joining us in the studio is our old friend, Professor Huo Deming from Peking University.
Hello.
Professor Huo, welcome to our show. Well, the U.S. is still in deep trouble. At this time, Secretary Geithner visited China. He gave a speech. You were there. What is the main messages?
Okay, one word, assurance. 2 words, bilateral cooperations. Many words, trust me, I'll be responsible.
So he's giving assurances to China, but the safety of China's dollar assets are a key concern of the Chinese government. What do you think of this issue?
Well, he made several, I should say, commitments, namely he get the fiscal deficit down to 3% of GDP, and also he keep assurance that the U.S. will remain open, which means there's no trade protection. And also I noticed that there is a non-inflationary growth that appears in his words, which means U.S. is going to pursue its growth, but without inflation. That's a key assurance.
Can he deliver on his promises?
Well, let's keep our finger crossed. Simply because in this downturn, in this economic crisis, I think no one in the world knows how long the crisis is going to last. Now, if that happens, which means U.S. is going to put more funds or a rescue package to its domestic economy, then I think the fiscal deficit down to 3% of GDP is going to be very tough.
Do you think the Chinese government will buy into this idea that the U.S. Treasury bonds will be stable and the currency will be stable?
In the long run and short run, okay. In the long run, we all know that the current situation, namely so much money put into U.S. bond, is not healthy. But in the short run, the U.S. government bond or its securities was still the safest assets in the world. So, what about in the middle run? I think we all know something has to change, and it's a balance between U.S. and China that's going to keep our track straight.
Yes, indeed. And now let's take a look at a survey conducted by Beijing-based Global Time. It shows that the majority thinking too big a holding of U.S. bonds is risky for China. Only 6 out of 23 experts think China's holding of dollar assets is safe. The other 17 think it is risky for China. But on the question of whether China should substantially reduce its holdings of U.S. Treasury bonds, only 8 said yes. So a majority of 15 said no. So it seems China is now in a dilemma whether or not to continue to buy U.S. Treasury bonds. On the one hand, if we continue to buy, there is a risk of devaluing of the U.S. dollar assets. On the other hand, if we don't, then the already purchased U.S. assets may devalue at the same time. So what is the approach that we should
That's
take?
a dilemma which was created by history. Now we should focus into the future. So what about the future? And look at the current path. If China is going to grow as last 10 years or so, then that number can easily be doubled or quadrupled. And that's what would be a very scary situation. So the best way is that what we should do now, so that the number, maybe 2 trillion reserves, will stay there. And among the 2 trillions, maybe 30% is in U.S. securities. Then that would be a very good situation for the China's long-run growth prospect.
Some are suggesting that maybe China should capitalize its surplus to buy resources or equities rather than treasury bonds. What is your take?
In financial terms, we have to compare its riskiness. So buying resources, petroleum, steel, or any other natural resources, no more risky or no less risky than U.S. securities. So financial expert will tell you, for instance, petroleum prices, it fluctuates a lot. So if you buy into those energies, you're also running into risky business.
So on either side, it's risky there.
Definitely.
In the past year, the U.S. has been calling for China to further appreciation of the RMB, but this time it seems that the U.S. has softened its stance on pressuring China to appreciate its currency. What is your take on that?
Yes, indeed. Geithner is using a softened words. I think he said flexible exchange rate is beneficial to the growth of economic engine. Namely, I think what he's saying is that if we, or Chinese government, the Chinese government make the exchange rate flexible, that will help the Chinese economy to grow, but will change the current engine, namely export and investment, to different engine. For instance, domestic consumption
demand,
and so on and so forth.
And also, Geithner is likely to try to persuade China to buy more U.S.-made products. In what approach do you think the two countries can join hands to make this happen?
Yes, a lot of Chinese import now is for export again, commodities or natural resources. So a lot of the imports that aim for domestic consumption, that's really constitute a small portion of total imports. I think Geithner means that China, especially Chinese economy, need to open up its market more in terms of consumption goods and to U.S. or to even Europe or other countries. I think that's also a very encouraging word for our economy.
Do you think the picture will change where the U.S. is the biggest spender, where China is the biggest saver in the world?
Let's hope not. That's not the case, but in the short run, that's going to be the case, I'm afraid. China is going to be number 2 in terms of the economy size. So how these two economies cooperate, whether one side is doing all the savings and the spendings, that's obviously not going to be sustained for a long period of time.
Okay.